following is an update and technical analysis on Carnival Corporation, a company of the consumer cyclical sector in leisure, right based upon the daily realm, where I had mentioned this nice, clean, divergent high combined with exaggerated negative and bearish divergences amongst all three technical momentum indicators. Watch for a break line of this minor primary reactionary uptrend line off the June 2023 reactionary lows on a solid, clean hourly breakdown sell signal, and for a gauge in the, not only the bottom of the gap 716 price support, where we were in a trading range, the beginning stages of a multi-month trading range that had significant posture, which would likely serve as a catalyst for a much longer, stronger wave of selling on a break below this key trading range. Additionally, with a huge volume at profile zone where you're just trapping in a ton of longs on a move to the downside. Watch for the 1598 price support, 1504. We had the 1406 50% fibs retracement, and then ultimately that last and final target right at the 1312 price support. And here's the update, where the entirety of the trade and the move to the downside was good for a 32.35% crash. We have completely taken out the 1312 price support level. We ended up backtesting it really to the butt end, correlated with the 50 hourly and 50 exponential moving average, only to be rejected impulsively with a complete near-term backtest of the 50-day moving average once again. And it has been a rough sell-off since. And zooming in upon the hourly interval here, what we have now is a sustained bullish falling wedge pattern. We have near-term positive and or bullish divergences really amongst multiple indicators, with a green candle close, slight close above the zero line threshold in the oscillator histogram. We've had just crude oil prices surging beyond the company's influence, could significantly erode profit margins. And I believe a lot of this had a lot of the catalysts. Fundamentally, the company just continues to grapple with a considerable amount of debt load. And with being part of the consumer discretionary sector, the cruise ship operator faces heightened volatility to economic downturns, whereas leisure travel is usually among the first areas that are trimmed in tight budgets, where I believe the Carnival's earnings may wane during such economic contractions, where the company, once again, shoulders a substantial debt burden nearing $30 billion, and the insurance payments will likely dent earnings. If and when you maintain a strong belief in Carnival's long-term perspectives and the prospects of the company, keeping an eye on specific price levels can guide your strategy for gradually dollar cost averaging down your holdings over the years. And zooming you out to the daily interval, I believe I believe there are some key technical price support levels to hone in on, average down your key position here at the 1154 price support, 1110, and the 1038 price support. New significant developments amongst all multi-year price pivot points, reactionary high and low, transitioning points really across the board. And I believe that some of the key historical buying and selling pivot points are among these key levels to dollar cost average down. If we burn through those positive and or bullish divergences there in the near term, which would more than likely come with a much larger wave of selling to some key additional targets down below here. And then ultimately the nice clean price support level that I would highly correlate with a nice price movement and or a long trade setup is based upon the 100 fibs retracement, call it 870 price support level here. It coincides with the bottom of the gap there for 850, call it 854 price support. And as I had continued to emphasize in my prior video, there is a unique beauty in the chaotic rush towards the exits.